Fishers, also one of your favorite markets, right?
One of my favorite markets. I got to tell you though, it's falling. It's falling. Not that this isn't an excellent market to be in, but this is a market because it's been so saturated, I think, over the last few years. It's beginning to fall in where I'm going to immediately put my money. Because you're only going to, in my opinion, capitalize on one of those ROI objectives, which is your appreciation over time. I do think you're going to see some appreciation over time here in this market, but you're going to see we've been trending long enough with our average days on market being high to where I'm probably not rushing to this market. Okay. Now let's just kind of go through our bubbles here. Our median rental price over time looks like we're right in tune, and I can't wait to see if this graph is going to stay consistent right along with it. But it is interesting to see we are right in line with where we were the previous year. And also not what you want to see, right? Year over year, we were just talking about in Noblesville, what you want to see is a percentage increase. I want to be able to increase my rent year over year. And in fact, this would show that our average rent, I'm going to jump over to this middle box because it correlates with this. Yeah, I mean, we're down 1% from December of last year. We don't want our average rents to go down year over year. So I'm probably pausing on Fishers for just a short time just to see what's going to happen and see if I can afford to invest in this area and continue to see a positive return. But
yeah, I would say unless you are more comfortable with a safe, super safe, I would consider Fishers a super safe area to invest in. I mean, that is a solid community with great schools. Maybe you're not going to see the rent growth for, the next, 6 months or year, or maybe year and a half, I'm not sure. But what you are going to see is most likely appreciation. So if you want to have the appreciation and a super safe area to invest in, then I would say Fishers is definitely worth looking at.
Yeah, I agree with that. Yeah, I'm glad you mentioned that. That's exactly what I would mention. And I'm just going to quickly mention this. This isn't a short-term rental platform that we're using here with these market reports, but we have had some short-term rental success in that area. So maybe let's see if that could be a good market for short-term rentals before the Fishers community gains any traction on limiting your short-term rental possibilities. I know that those HOAs are starting to clamp down on those, but maybe that's a market we'll see here in the Fishers area. It's north enough to have some relation to Grand Park and the activities that are available on the north side. So maybe we'll see. We'll see how my attitude changes here over the months.
All right. Anything else on Fishers you want to add?
Yeah, let me just I'm just gonna kind of gloss over these bubbles here. Active homes 112. That's very consistent with what we were seeing last month. 117 is what we were seeing. So not much of a change to speak of there. Average rents we've covered. Average days on market. Now this is the one bubble that I'm always super in tune to. Now we're 60 days, which is down 37% from the previous month of November, which was at 76 average days on the market. And we're up 60%. I got to tell you, it's hard to tell Fishers with this market report, as this is where you should be looking to put your money. But again, just like Mike was mentioning, this is, I think, just a safe market where you're going to really see your ROI reflecting your appreciation. So 60 days average on the market. Average sales price, again, if you're an investor in this market, you're seeing your average sales prices tick up. So you're at 353, where last month we were at 337. So up 4% month over month. Number of homes sold, 57. Previous month we were at 66. Nothing more to speak of there than probably your seasonality. I wouldn't even attribute much to the interest rate concerns or anything like that. That's seasonality, number of homes sold going down month over month.
Yeah. Well, let's look at the historicals here.
Let's do it. Active homes, pretty consistent, right? This isn't what we were seeing in the Noblesville market, which Fishers is not far from Noblesville, right? It's just south of Noblesville, but you're seeing that pretty consistent, which this is interesting to me right now. I'm just beginning to realize there's still new construction going on in Fishers, although not near as much, right? They're running out of space. Not near as much that you're going to see in some of these other sub-markets, but you're seeing those active homes trend down, which is interesting. So,
Mhm.
what do you want to do with your money if you're seeing active homes go down? Which to me also speaks to the appreciation ROI standpoint. So I'm going to plant that flag. I'm going to go ahead and plant that flag in the ground and say this is your appreciation play in the Fishers market.
I think just going back to the fact that this is safe. I mean, there's nothing alarming here. There's no super highs, super lows. I mean, you start at 99, you end at 112, trending down a little bit. Again, this is just a safe, kind of a layup, easy play for you.
Yeah. And if you're not overly familiar with the Fishers market, it's a great expanding market. They have a lot of nightlife, a lot of day life. They have a lot of activities to bring people from all over the Indy market to it for what, lack of a better word, for tourism type activities. So, I mean, that's directly going to reflect in your appreciation play over time to continue to grow as a community.
Yeah, just a good solid community. They've invested a ton of money and effort into developing that new downtown. I mean, they're putting a ton of money into their parks, into their roads, and it's just a solid community.
Yeah, turn it into a Carmel Junior, if you ask me.
Yeah.
So days on market, just kind of gloss over this. We've already beaten that to death, right? The previous month we were seeing 60. We are seeing that decrease in December, which is a little bit unusual. It doesn't speak to seasonality. So that is a good thing that you want to see month over month, without a doubt. But in the Fishers market, you can take one look at this graph and know that this is higher than what you want to see as an investor. This is averaging higher than what I want to see in the Fishers market, which is honestly, I gotta tell you, it's a little bit surprising. I mean, here we are, boots on the ground. It doesn't seem like that. And you know what? Maybe that's because we're a better property management company than others. I'm not saying it. Somebody did. It wasn't me. I don't know, because I think we lease properties much quicker than this. I really, really, truly do. In the Fishers area, I feel like those go so much faster than this. Maybe that's, again, because we're just keeping our investors in tune and we're making adjustments quicker than others. But nonetheless, this is for our investors to know this is higher days on market than you're wanting to see.
Yeah, and I think it's not just Fishers, it's everywhere, as we've seen already through these market reports. And I think I'm going to lean on exuberance from investors trying to kind of maximize their rents, maybe to their detriment, to pushing up those days on the market, because you push too hard and your vacancy is going to increase, and that costs. I mean, there's a cost to vacancy for sure.
Yeah,
so.
absolutely. Yeah, I think that ties the bow on Fishers.